Well, a roundup of all the key earnings post-market hours, starting with Cipla. Well, this one reported really good set of results and which were pretty much above the street expectations. The profit stood at about 578 crore rupees against 447.2 crore rupees in the previous year. Well, having said that, the company also reported better than estimated revenue growth of about 9%, which came in about 4,346.2 crore rupees. Well, let me tell you, the margins also witnessed an improvement to 24% versus 22.7% in the last year. In fact, the company also mentioned that their India business grew by about 16% on a YY basis and clocked in a healthy growth, and so was the case for the US and South African business as well. Well, moving to REC Limited, well, this is another company that reported its Q1 FY21 results. Well, taking a look at the company's profitability, they reported all-time high quarterly profit of 1,839 crore rupees as against 1,500 odd crore in the previous year. Well, net interest income also reported a good growth of about 19% on a YY basis to 2,794 crore rupees. Well, let me tell you, in a time when all the NBFCs are facing some amount of issues and challenging environment as far as their NPAs are concerned, the REC did witness and reported steady asset quality. The NPA stood at about 6.11% versus 6.59% sequentially. And not just this, the company, looking at the current scenario, did beef up their provision coverage ratio to 52.89% against 49.64% in the previous quarter. Not just this, the company was able to report a good loan growth of 14% on a YY basis to nearly 3.3 lakh crore rupees. So definitely looking at the current challenging environment and the environment being tough for the NBFC sector, this company reported decent set of results. We have Amara Raja next in focus. Well, definitely COVID-19 led lockdown and the entire slowdown due to the pandemic has resulted in weaker set of results for Amara Raja. The consolidated net profit fell by about 56% on a YY basis to 64.4 crore rupees. Well, the company in their press release stated that the performance during the quarter comes against the backdrop of severe disruptions in manufacturing, supply chain and sales and distribution operations due to COVID-19 lockdown. In fact, as a result, we did see the revenues during this quarter, compressing and coming in about 1,151.2 crore rupees, while the margins also were pretty much weak and contracted from 15.4% to 13.2%. Well, we also had Siemens that reported their Q3 FY20 results. Well, this company particularly slipped into red and reported a loss of about 2 crore on a consolidated basis. Well, in the previous year, the company had reported a profitability of about 250 odd crore rupees. But not just this, the income from operations also halved, and EBITDA, as far as the operational performance is concerned, the company reported a negative EBITDA of 6.5% versus a positive EBITDA of 355 odd crore rupees in the last year. Well, this definitely did impact the current scenario, did weigh on the company's performance. As a result, they reported weak set of results. Well, lastly, we are also flagging of Concord. The company posted a profit degrowth of about 76% on a YY basis to 58.3 crore rupees. Well, the revenue also fell by about 28% on a YY basis. Well, let me tell you, the company's total volumes declined during this quarter. As a result, they did weigh down on the top line and in fact the bottom line as well. Well, lastly, if I talk about the margins, sharp contraction of more than 1,000 basis points for this company, which came in about 13.3% for quarter ended June 2020.